right, Tim. All right. So, oh, back. We called talking about this gold. I want to talk about a high, low, low, low week, high a week setups, right, and takeouts. So when we doing these technicals, and I always run down on Sunday about how like to mark my high and low each week, the prior week, and I just do my little simple dizzle. It looks simple, right? And I mark out my closing price, but we're gonna keep this just like this. So high week, low week, right? Previous week. Now I'm gonna drop down to the 1 hour chart. Now, what I like to do is got the session breaks on. Don't go back. This was Friday. Okay. Because I'm gonna talk about what happened on Tuesday. All right, so we got a Friday closing price. Boom. So we closed that on Friday. All right, cool. So you want to mark out your Friday closing price, right? And then from there, you also want to mark out your high and low of Friday. Because when the market opens back up on Sunday, going into Monday, when the week start off, you want to see, are they taking out the weekly lows and highs, right? They're going to let you know you're getting that progress. And that's exactly what I like to wait for and see. And it also helped me track the market trend. Like I'm not looking for nothing crazy. We don't have to do nothing fancy. I'm just looking for it to take out these levels. That's it. Nothing too fancy, nothing complicated. Just look for it to take out a level, right? So we got Monday coming in. Boom. All right. So we got our Monday consolidation, price moving down. Boom, boom, boom. Right. Now we got our high day Monday. It did not take out Friday high, so we fell in the span to the upside. So I'm looking at that as a range expansion, right? If we are not going up, that means we're going down. Easy, right, to comprehend that. So we really kind of stayed in a channel all day Monday, went sideways. There's a lot of consolidation with no momentum showing any signs of pushing up. Gold been running hot. So I can expect that, like, okay, cool, they're going to have to do some form of retracement. They're going to want to pull down rebalance price on a higher time frame. So the higher time frame trader is going to want to start selling off because they up, they profits, people want to take money. That's how the game go. So I'm gonna mark out this Monday close of price. Boom. So Monday close red day. You know, this is a high, this is low. Price closed below the previous day open. So technically, true day open is right here, Sunday, 6 p.m. That is Eastern Standard Time. All right. So when it closed below the true day open, which is here, this is a red candle. So now we start the week off with a red day, right? But just keep that in mind. Boom, boom. All right. Now, when we open back up for Tuesday market, Asian market, right? You see, we playing around this level. We drop down, take out Monday low, we take out Friday low, right? So when I woke up this morning, well, that Tuesday morning, I was talking to Rod. I said, hey, we took out Friday low. That means we got a range expansion. We finally broke out a last Friday range and we standing to the downside. Also, we took out Monday low. So we're definitely going to do some form of expansion with the weekly low being on the table. So I'm like, we got a weekly low on the table. They haven't hit. Of course, they're going to want that. They always want one of these weekly levels. They close to it, they're going to try to go get that, right? You just got to understand when and where. So what I did was I went from Monday high, boom, ran my fibs down to this low, right? This Tuesday low. It's our lowest point for the moment, right? So I ran down to this low, looked at the retracement, okay? Got up in this ballpark. Great deal. You got a 61% retracement. Boom, went a little bit higher to 78, but I always look for a 61%, at least 50 to 61%. I like this zone. Let me see. Oh, that ain't the tool I want. Okay, this will work. Anywhere in this zone is good, right? I like this zone here. So this zone tells me that it's gonna make it retrace back, and if it start rejecting in here, that means price is balanced. It's a great place to want to entertain short sales, especially see the market expanding to the downside with weekly liquidity sitting on the table. So this is your target, or you can do your negative 27 or negative 61, which it did get to, right? But I'm not greedy. If I can get a 100 ticks, wherever my 100 ticks at, I'm going for it, right? So let's say we entered at the 618, and I'm gonna say, hey, 618, where's my 100 ticks, right? Or where's the last swing low? First, I'm looking at the last swing low. That's 194 ticks. Good deal. That's plenty money. All I want is 100 ticks. I'm not greedy. I just want to get in, get out, and get on with my life, right? 100 ticks there, quick, boom. To the weekly low, it's 200 ticks. So you got the high, or you got potentials to get anywhere in this ballpark. It's plenty money to get in. So you don't feel confident about where the market is actually going. You can always wait because there's enough money on the table to make it worth your while to, be a little more patient and pick your entries, right? So on the 1 hour chart, I send a notification off. I said, hey, keep your eye on gold. It still got the week. It took out the Friday low, weekly low still on the table. I think they're going to want to go get that, right? And they did not let me down. Definitely go get it. So once I see we had a stop right here, candle equal size, put a pair of candles in right at the top, boom. They dropped 90 ticks on this candle alone. Let's get rid of these fills now. It's getting a little confusing. If you look at it from this candle open here, right? They went up 20 some ticks, then dropped 114 ticks off the open of this candle. So you can just imagine on a 12-minute chart, it was 90 ticks in that first candle. I was like, man, I'm just sitting back like, oh man, y'all gonna do the game like that? Like, come on. Get out to it. So this the candle I was looking at. You see this? Right? Almost at 8:30. Market just hooked. I think it was some news came out or something. It had to be like a news. But you'll see, like, yo, that's one severe drop. And then price pull back. So now I'm like hella skeptical. I'm like, I don't know. I'm gonna be a little patient. Be a little patient. Let's watch them. Like, let's watch them. Like, let's see what's going on here, right? I'm gonna do this little replay button so I can cut out some of this price. I don't want no janky stuff going on. Because I'm gonna drop down lower time frames, and I want to make sure we keep track. Right? So I seen this candle drop down. Boom, next candle come in, and then it started getting funny. I'm like, man, that was crazy. So I'm just watching. It's not my trading day, and I'm watching. I'm like, man, should I just take a trade? Because I logged in, but I wanted to enter the trade up here. So this is where I always like to be at, up here, because I know for sure I want my stop loss in this ballpark. I need to be like somewhere over here. That's what I was looking for. I was like, all right, what can I risk? Right. So I was looking for a little consolidation because I'm like, all right, where are you going to bust down at? If you take this wick out, because it's the wick I was looking at, I say you take this out, that's a good entry. But the problem is the stop loss. I'm like, man, that's a lot of money that I got to put up on the table. I got to put 56 up. It was really looking like 64 for safety, just so I can get this breakdown, because I knew if it breaks down, it's gonna drop. Right? And all I want, once again, all I wanted was 1 2. Should I took the risk? Yes, but I don't like risking that much. I don't believe I should have to risk that much. So now it was more or less, let me figure out where can I nitpick. And while still running my technicals, the market said, no, we dumping, the heck with you, right? So I'm dropping down to my 6-minute chart at this moment, trying to figure out like what's a good entry, what's a different alternative. They had two candlestick pullback, then it is dumped. Because once again, another pair of candles, right? Let's slide you. Boop, boop, boop. So when you see this equal size candle take out the previous candle, you know it's game over. They're not playing around. They said, no, we not playing around. We're going to drop, boom, boom, and they got to get it. Now, I did see one great entry on a 3-minute chart, and I mean, it was fantastically well, right? I remember it like it was yesterday, 2 days ago. Now, I talk about this all the time. So once again, let's zoom in on this. So you see the pair of candles right here? Strong. Coming in strong. So you had this gap. They filled the gap. Boom. You also had this little imbalance right there. Another little fair value gap. If they was tiptoeing in, right? Ooh. They didn't quite hit it, but you know they was there. That wasn't my worry because once again, reason why I wasn't concerned about this candle because that candle didn't violate market structure. This one did, right? See, this one didn't close and break out. This candle closed and break out. So this was a significant candle of interest here, right? That's what you got to pay attention to. So when you get these large candles, say, hey, I got two fair value gaps. I got this one engulfing candle and then this one candle that got me look like it's a fair value gap. Problem was it did not break no market structure, so it was not a agent of concern, right? But this one did. Now, understanding that fact, you can see that when price pulled back up, got to almost to the top of this candle, you put a pair in. But the one detail for the best entry, if you didn't take that little, drop right there, was right here. Boom. This order block. Sale. All right. This 3-minute, 3 candlestick continuation order block. Let's talk about them. They never fail, never let you down. Now, Rod, this is what I meant. So when it originally rejected, right, I entered on the way down, right? Stop loss somewhere in here. I'm like, okay, we cool, whatever, right? But they said we're going to spin the block and try one more time. And that's when they, wicked at me. And I was sitting there because I walked away. I set my stop. I said, I entered the trade, set my alerts midway down so I can readjust my stop loss when it got down to this low here. I set my stop loss. I'm tell you. I said, no, actually, I set an alert, but here, right? Because this one so when it got to this level, this one I'm supposed to move the stop loss when they got down here, right, to this red line. This I was supposed to move my stop loss when they got down to that low because I know they're far enough away and it should be safe. But what happened, they spent the block, tagged me, and I was looking stupid when I came back to find out I was out the trade a long time ago because they hit this level and I was like, okay, now I can move. I said, wait, what my trade? Did they take me out? What happened here, right? Because it supposed to be looking like this. No, you ain't going that high. Oh, you're supposed to be right there, 15 ticks, and we're looking for the Honda. All right. There we go. Boom. So you see, 1, 2, 3, ABC. I ain't trying to be here all day. I ain't trying to be greedy. That's a nice 1 to 10. Call it smooth. You don't have to do all that. You feel me? And then ask yourself, how long did that take? From this candle to this, well, technically they really got you out on this candle, right? Because you want to give yourself that grace. They need a strong push. The reason why you want to be too greedy with your take profit because you need a strong push to get out those limit orders. A lot of times they'll wick and then reverse. He's sitting there crying in the car because you gave up a 1 to 10 trade, being a little too greedy. So you need to make sure that they hitting it with power and strength. So they need to do more than just tap that level. They gotta hit that level. When they hit that level, boom, you guarantee to get out. You on with your life, right? But you look at it, that was a 30-minute trade. From here to from entry to exit, 30 minutes. In and out. But we were stalking the trade way back over here. Actually, way over here, like around the 8 o'clock hour, 8:24. So we had about a cool 20-something minutes of prep. Then once it started going down, once it sent the announcement, our heck broke loose. Boom. This is your only opportunity. This is a great opportunity. Very safe because now you know you got all this down move like that. Boom. And then you got your failure swing here. Boom, right? Once you got that large engulfing candle with the failure swing, and then you got the order block for the entry, you just have to manage your risk management just had to be on point so you can manage such a trade, right? You could easily put it up 27 ticks. You want a little more safety to put it above that block right there, that rejection block. So you got two combinations of order blocks here. Stop loss should have been there. Don't be cheap. Sometimes I like to be cheap. That's one of my issues. I'm a cheapskate when it comes down to trading. I don't like wasting or risking a whole bag for a trade. I just come back another day because it's going to be another opportunity, right? So once you've seen this with this, use one of these. This is a great entry. When I'm using this as an entry, I like for a price to get like close to the high and start rejecting because sometimes they can violate this high and then reject, so you can get your wig knocked off for no damn reason. So let's wait, let them see some rejection. Once you see some rejection, same thing here. I wasn't 100% certain because nobody got a crystal ball. I don't care how many times they said crystal balls don't exist. It's the law of probability, right? So once you see they start rejecting, you can then take your risk and say, I take that because whatever the high is, that's my risk management. And I can just set it and it is what it is. They take it, oh well, then that's me. It's my turn to get out. My day. I'll come back tomorrow, regroup, right? But yeah, that was the gold trade. And not only that, they went for it, they went for it. So you would have took that entry and then you will say, hey, I'm gonna be a little greedy. I'm targeting a weekly low. Now you can be right above the weekly low, so they can get down there and tap it. Boom, and you would have got 192 ticks, right? How long you would have had to hold that trade? This one, an hour 27 minutes from your entry point, right? But you had a great entry off the failure swing with the three order block continuation, three candlestick order block continuation, and you could have smoked them. Plus more using your fibs, you could have went to your fibs. Shoulda, woulda, coulda. But right, but this is this hindsight review, and these are things templates that you study, pay attention to, and look for rinse and repeat opportunities because it's not the first time it's happened. Once you get familiar with your tickers, once you get familiar with the market, you will see these type setups happen over and over and over and over and over again, right? You have to be available to take those type setups with no hesitation, but that comes with rinse and repeat, right? You gotta just hit it, boom, study it, boom, whatever you got to do, screenshot it, post the pictures up. A lot of traders say post the pictures of the setup so you know what they look like because they're gonna repeat themselves every single time without fail. So yeah, that's what happens. All right. That is crude. I know. So now we got to get the crude oil because that's the one that happened today. It was a great setup. So let's get out of this. Then I'm gonna walk y'all down on crude oil real fast. But yeah, that was definitely Tuesday setup. Tuesday was a great day. It was not playing around. Had a couple of pullbacks. So you had a possibly you would have took it at the top. That's one entry. If you would have took it at that pullback station, those two off the 12 with a 6 minute chart, and then you could have locked in on that 3 minute chart for that last entry before it just took off running. So you had about three opportunities at the high, but you must catch these trades at the high. If you start catching them midway to the low, that's when you start racking up unnecessary L's, right? Start putting yourself in unnecessary danger by trying to take these trades midway through. Take them at the screen point. That's the safest point to take these trades. When it's up at these highs, this is where you want to be taking trades at, not midway down here when it's fully played out, because how low is actually going to go? It can stop any moment and kick back up. So let's mark this up while I'm speaking on it, right? This your Tuesday low. That's a great range expansion to the downside, right? Then let's mark that up. Tuesday high. Ooh. So think about this, right? Now, this is Wednesday price action. Thursday, Asian market open. We are still here all day Wednesday. We're here. We ain't going nowhere. It's breakout, breakout, breakout to the downside, right? So now you got to ask yourself, will they go down again or will they decide to go up and make a high of the week type situation? If it's consolidating at this low, Tuesday low, they really ain't violated. They barely wick past it, didn't close and breakout. We must close and break out by this Asian market or London market. If not, we probably going up. Look at the oscillators, right? We in a nice neutral spot. Everybody's consolidating. Do they want to go up? Check the news. You don't know what's a good catalyst to drive these boys up, but they definitely can go up. So you just keep your eye on it. Right, let's slide over to CL real quick. Get these boys in. I'm gonna walk down on that trade. I seen it this morning. Everything matched up well. I was very satisfied with it. And yes, sir. Once again, it's going to go back to the weekly levels. Just quick rundown, mark out the week high, week low type situation. You know, rinse and repeat. Nothing fancy. Just straight technical. Something you can follow along with, right? Sing along. So, I'll bet I'm going to tell you when we drop down to 1 hour. Okay. Start of the week, right? So Friday was our week high, last week high. So we looked at it. Friday low was here. If the weekly high is Friday high, I'm not gonna be like, oh yeah, I gotta add that too. You can do want to, that is overkill. So you get the point. You know which one it is. So first thing I like to do when they hit the level, I dash it out. You know, take it down to keep the confusion off of it, right? Then from there, we'll mark out that close, Friday price close. All right, cool. So then we got Monday roll up. Boom. Monday low. Technically it's Sunday, but I'm gonna move that. Second. Monday low. Great. Monday high. Boom. So moment they start acting up, start doing all of this, right? I knew it was some BS. So they came up Monday, then pulled back down all Tuesday, right? I'm like, okay, great. So now we took out Monday low. We also took out Friday low too as well. I had an alert set there. I was watching it. I'm like, okay, bet, welcome to the market. We took Tuesday. Tuesday dropped down, it went low. It done a range expansion back into the previous week. So looking like a failed breakout. So we don't if we didn't close above or stay above the last week high, well, I'm gonna look at that as a false breakout. On a higher time frame, you gotta pay attention to these things. If it don't close and breakout, then you know for sure it's either a reversal or it's a sideways market. But typically, it should, if you're going to take a high or take a low of a week, you want it to close, make sure that weekly candle close in that area of direction. If not, it can be in a potential reversal. So those things matter. That's why I mark them out and I pay attention to like, what are you doing? The moment, even though they got candles close above this level, but on a weekly chart, we know this is a wick. So real quick, before we get away from that, I'm going to show you. See that? That's a false breakout. Yes, they wicked up there. They got something. They was targeting something. They hit it in this ballpark, right? With this other wick, you was something here before. So all they did was come back. Now look, this thing gonna close as a doji. We got 2 days left in the the United States market side. On the Asian side, they calling it 1 day because that's why the things say 1 day, 22 hours. So we got 2 days left in the market, right? It's closing at a doji on a high, the previous week high. So come on, that can be an easy reversal back down to the downside to take out the weekly low. or we just gonna go sideways. Who knows? Maybe we can go sideways this day or this week. Next week we open up, go run highs. You don't know, but that's what it's shaping up like, right? It's a false breakout. They did not to do. Okay, so from there, coming into the market, I seen consolidation, all Asian, all London. You boys playing, and I said that's what I'm talking about. I said that's what I'm talking about right there. I said yes, sir. We are consolidating. Okay. I said that's what I like. I don't like all the foo-foo gaziness. I like the consolidation. This is cool with me because I know for sure we probably gonna get a nice parabolic move on the breakout of this consolidation. So I instantly dropped down to the 12-minute chart. Then I start looking, right? So once I seen this, I'm like, okay, bet this is my trading hour. I start looking, especially it's a Wednesday and my trading hour. So once I start looking at them, I'm like, Tuesday low still on the table. My target is always Tuesday low or the previous day low. If I can help it, this was the Tuesday low. So all I did was run my fib because look, that's the pivot. So I'm gonna go from this pivot down to this pivot low. Boom, they hit. I say, yes, sir, let's get it. I said alert. So now I'm right up in here watching the market, watching, being patient, being patient. I entered in on this candle, like on a 6-minute, 3-minute chart, and then we just went for the ride, right? They definitely tried to spin the block a little bit over there, but it didn't pan out well for them. Let's drop down to the 3-minute chart. Boom, 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 boom. So when you start getting down to the 3-minute, you can see all the little nicks and knacks of it, right? So you can see how price failed to get up there, right? So that's a little small time frame failure swing that happened here. There's one here, then this is the second one. They're gonna confirm your drop, right? And then you always can, look at that low break of structure for a second chance pullback. Anytime you get a break of structure, a pullback should happen in some form of fashion. Sometimes they don't, but they definitely give you one. As you see, pullback happening there. And they took that chance to go ahead and dump. But if you would have took it, set your limit order, like right up in this ballpark, if you definitely was available for the 618. I like to target 78, or if I can get to the high, I was looking at that too. So I'm like, let me get, I'll risk a 20 piece, right? Or I want to see some form of rejection and then from there. But definitely look at that. You had the, the zero level of the pivot, you had 90 ticks. You look at right here, Tuesday low, you at 108, right? So since I was a little patient because it's outside, it's a certain time frame that I like to trade CL. And when it wasn't there, I had to take this setup twice. It wasn't there, so I have to wait, and I had to weigh my odds out. What was it? 73.53. Yeah, that was right over here. Then I put a 20 piece on it. I said I'll risk a 20. So once it rejected, took that, sit back, let it wait. Boom. From there, my take profit to there. Boom. So I got out. That's what they licked me out. Well, they actually hit my take profit. Boom. And that was the end of the story, right? But I'm waiting. I'm looking for these setups. I'm like my consolidation. I want to break down a retracement back to 50 to 61%. It got to be at, for me to even look at it, it need to be at the 50. I'm a set an alert. It got to be up there for me to look at the chart and consider logging into my trading account to take this trade. If it's not there, I'm not logging in. I'm not caring. I'm not putting myself at risk to take random trades at random levels. I'm not doing it anymore because times I've seen it made a 38% retracement. You get a bear candle and you say, man, I'm going to shoot my shot. And then they stop you out. And then you could have waited a couple of more ticks. Let them get as high as they want, because if you wait, you can exit this trade faster. You have a better stop loss. So think about it. If your stop loss is here or even here at a high, Well, you don't have nothing to worry about. And think about this. If you said, oh, I'm set a limit order right there. This iron 50 something ticks. I don't want to risk that much. And you just try to figure out where can you bring it back down to, right? But even at that level, look, they barely gave you a 3 tick drawdown. So you just want to put a 20 piece up and say, all right, cool. Or wait and say, well, I'm gonna wait for it to break down. And then from there, I'm gonna be like, all right, I got 24 ticks on it, or I got 20 ticks, or whatever you want to put in a moderate risk level, and then you can upgrade what you're looking to take. You could have went to the negative 27 or negative 61. Then you could have made up that difference, but that's still a 1 to 10 trade, right? So these are the things, or these are the examples I'm looking for when I approach the markets. I want to see these things setting up in place by the time I get to the market to take my trades. If it's not there, I'm not looking to trade. I don't want to take it. I don't want to put myself at that risk. I don't want to pile in losses when I don't have to, right? I like to sit on my hands. I'm more patient now. Learn, be more patient when you're approaching the market. Take less trades, take less risks. There's no need to take more risks when opportunities are really not there, right? Taking risks for no reason leads to compound losses, lead to blown accounts, lead to bad times. You run out of capital, eventually you will. Now you're scraping and scrambling, looking like a gambler, trying to get back into the market, begging people to help you get back into the market so you can gamble more. But that's not the right thing to do when all you have to do is sit on your hands, wait for parabolic moves, no look back trades, right? If you look at it, they didn't look back. The moment they to hit this second chance right there, boom, it was murder, she wrote. No look back. They was done. They was gone. You had a 2 candlestick, then boom, boom. These are setups I like to hit. I don't want to be here all day. I don't want to have to do this and that. I ain't trying to trade all day long every day, right? So let's say you took this entry at this level. How long did that take? 33 minutes, done dollar. If you trading with volume and you have your proper time set up, because I know when I enter CL, my typical trading time is 15 to 48 minutes. I look at my stats. 15 to 48 minutes, I should be done with that trade. It shouldn't extend past an hour unless I'm just that wrong and that early. Because you get in too early, it's low volume, no momentum, and you're going to be stuck like Chuck. Now, I'm going to show you because it shows here in the MACD, right? Boom. Yes, sir. Are you ready? Oh, yeah, yeah, right. Yeah, right. You got a question?
No, I didn't.
Oh, okay. No problem. But yeah, here's another confluence too, right? I was looking at this morning when I approached the market. Why the thing got me way back in here? Slide. So I already had the crossover on Monday, price driving down, right? So I'm looking at this first thing. Always, check your oscillators. So when I came down here this morning, I said, oh, the 1 hour is below the zero level. The 4 hour trying to get below the zero level, but the 1 hour is still below the zero level. Good for me, right? Now I'll go down to the 12 minute. Once again, I'm looking at it. I'm like, okay, this is what I'm waiting on. I want more confirmation because I know we got K2 lines spread apart. Check the distance, right? That distance matter. They're telling you the momentum. From there, that allowed me to think and say, all right, cool, be a little patient. Peep game, be a little patient, right? Wait so you can start getting some rejection and breakdown. Now I'm just going down the lower time frames and waiting on the weakness, right? Because they got up here and they said, okay, they start doing this. From there, you know how to reach your bearish divergence. You can tell just by that. That's a little quick little bear divergence. Mm-hmm. Well, momentum was not there. See how that line right here failed to make a high? That was a bearish divergence. It's time. That's later on. That happened later today, though. That's right. Oh yeah, this time we're looking at, right? So as you start looking at it, right around this time, we below the zero level. Everybody below the zero level. So we just waiting. Only one above the zero level is the 4 hour chart, but it's facing down. But we need everybody else to get in line with the 4 hour chart. Once they line up with the 4 hour chart, then it's smooth selling. So once we had a little bumpity bump right here, got that crossover, as Murder She Wrote. We back in business. You feel me? We standing on business here. So they got that little cross, whoop, whoop, whoop. Cheese slid off the cracker. All right, that quick, whoop, whoop. So you see it, they arched, they scraped the zero level. So them boys like this slid right across that, then boom, crashed out. I wonder if they got an emoji. Let's see. Let's see. Let's see. Yeah, I'm looking. Now, let's see. Where is it? Come on, help me out. I'm gonna have to see. I'm gonna have to make another one. I know what time it is. Baseball. Mm-hmm. Oh, that was drifting. This, yeah, whatever. Oh, he drifted. You get the point. You know, they're drifting. They like scrape across. They go. She'll go the other way, boy. I'll get rid of that. I'm working on it. Don't worry about that. Yeah, yeah. So yeah, once you see them scraping the zero level, then you just gotta wait for a good opportunity. Momentum's already on your side. You can sit back and be a little more confident. Take the trade, execution perfect. Boom, 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 boom. Done. Dollar. All right. Now that's me getting off my soapbox. Anybody got any questions? If not, we can ride.